Hey, it's Saylor, and this is episode 113 of the Orange Pill Investor. And today I want to talk about when should you sell your Bitcoin? When should you sell MicroStrategy? And I know the answer is never. You never sell your Bitcoin. If like I do, I also have Tesla. I wouldn't exactly call it a trading pair with Bitcoin or MicroStrategy, but and if one goes up and the other goes down, I could trade from the one that's pumped to the one that's not. They're both kind of techie stocks, so it's not like they're exactly uncorrelated. But yes, I've heard Michael Saylor say in interviews that diversification is just selling the winners to buy losers. I've said it. I don't need you to fucking say it to me. I've already heard it come out of his mouth. But I'm not here to carry Michael Saylor's jockstrap, as they say. So, you can follow Plan B, you can follow Plan G's power law model, whatever. I know they got like an East Coast, West Coast Twitter beef or whatever between those two camps. And I'm not saying either one is good or bad. I know some very intelligent people that are all for the power law and some that are like, nah, not so much. So I'm just talking back of the napkin, ballpark, because I always hear, oh, it's too hard to try to time the top. But is it really? And there's more reasons to sell something, and even Saylor's like, if you're going to peel off some Bitcoin to get something that makes your life better, then great. Like, there's probably pieces of art that he loves, and if he had to have it and he couldn't afford it any other way than to peel off a couple of Bitcoin, he might make that happen. He's got a lot of other tools at his disposal, so he could probably just borrow or lend or whatever the hell he wants to do to get whatever he wants at this point with as much money as he has. But for the rest of us, I think there's a reasonable argument that if something enriches your life more than some Bitcoin sitting in a dusty ass safe somewhere in cold storage that's just sitting there doing nothing for you, there's definitely a case to be made for that. But there's other considerations too, like I trade MicroStrategy in a margin account, and there's such a thing as concentration risk. And I tried to load up on some MicroStrategy when it dipped with like the last little scraps of buying power that I had available, and they just wouldn't even do it because over 80%, maybe closer to 90% of my account was in MicroStrategy, and it was levered just margin on margin to the gills. And they're like, nah, dog. if this stock takes a dump by 20%, like, you're screwed. And they don't know my situation. Like, they don't know that I have a plan for that to happen. So, not financial advice, but don't let yourself get wrecked by margin. If you see me or anyone else trading a certain way, they may have some in case of emergency, break glass situations, which I do. I've got a couple of avenues I can make some things liquid, and up to and including my Bitcoin in cold storage. To avoid a margin call, to avoid getting wrecked on MicroStrategy, and to avoid having to, quote unquote, panic sell some MicroStrategy, I would absolutely crack open my cold storage and sell Bitcoin. And maybe I'll be taken to task for that, and I'm not a real Bitcoiner. I'm whatever the fuck the cool Bitcoin maxi things are to say, and I consider myself a maxi, a Bitcoiner, but even suggesting that I might unload something from cold storage is grounds for having your Bitcoiner card revoked. But for sure, as soon as I get it, the next time that MicroStrategy pumps, I'm gonna have to unload some. I'm gonna have to buy some maybe some miners. I'm going to have to buy some more Tesla. Tesla wasn't exactly a dip today, but I mean maybe barely off its most recent high of like 190, so it was down to like 180. So I picked up 100 shares of Tesla just to have something to counterbalance the insane, irresponsibly long MicroStrategy holdings that I have, and maybe get my exchange to breathe a little sigh of relief, like, come on, homie, can you not think of anything else worth holding? So, but let's just, and I think I have this, shit, I don't have it up on, oh yeah, I do, CoinMarketCap. I have it. I used to be a degenerate shitcoin trader. I just traded everything. And so I never really, I used to spend a lot of time here in CoinMarketCap, and I would look and see, oh, let me trade Ethereum, and let me sell some Ethereum for Bitcoin, and let me trade some Bitcoin for frickin' Tron or any of this other ridiculous horseshit. So I consider myself a reformed shitcoin trader, and you know, I said like 20 Hail Sailors and had my sins absolved. But like, let's just say you were trading Bitcoin, and this is the scaling is way off to see these little hundreds or whatever. But when Bitcoin went over 1,000, meaningfully over 1,000, right? I mean, it got to over 10,000. So once it passed 1,000 and stayed there and never went below 1,000 during the next dip, right? So even though this went over 10,000, this really wasn't the 10,000 dip, or excuse me, the 10,000 peak, because it didn't maintain 10,000. That's what I'm kind of using as a qualification. So this was below, it had never been 1,000 before, went and pumped. This was the 2017 bull cycle, and then it never crashed below 1,000 again. So this bear market never crashed below 1,000. Then we got another bull market, and it went up to 57, and wasn't it 67 or something like that? Whatever the hell the top was over here, doesn't really matter. But then when it crashed, we had like a 75% drawdown. Oh, and what was this drawdown? So this was 15 or 17, right? Oh, 19? Maybe. And then it crashed to 3, or yeah, a little bit over 3. So again, about a 75% drawdown. That might be closer to 80, but whatever. We got 67-ish down to 15, 16, 17. So 75% drawdown. So in this case, you could, on the way up, if you were like, oh wow, it went over 1,000, should I be tempted? You know, back here, that was the rage. Like now it's like, oh, should I sell when it goes to 100? And I see people on my Twitter feed that are not Bitcoiners that are legit like, yeah, I've been holding it and I'm selling when it gets to 100. There is a metric ass ton of people that have their limit sells ready at 100K. So, I mean, we may blast through it and get to like 105, 110, 120 or something like that. But at some point, the momentum or the fervor is going to wear off that 100K, just euphoria. And that shit is going to pull back. I mean, there's always pullbacks. But anyway, I'm going to off track. But if you were like, okay, it's over 1,000, I want to sell at some point. Well, reasonably, how high was this going to get? If it 10x's from 1,000 and goes to 10, I mean, it crashed to 3 here. So anytime you sold over 3,000, if you sold at 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, or 17, you could still buy back cheaper in the bear cycle. So I don't really get the people that say, oh yeah, it's too hard to time the top. I'm like, yeah, you're not going to call 19, because 19 could have been 29, or 19 could have been 9. But if you're like, okay, it's 1,000 and I was buying it at 100, should I start peeling off a little bit? What about 1%? Peel off 1%, you get your limit cells. You peel off 1% at 2,000, 3,000, 4,000, 5,000, 6,000, all the way up here. And then, 1% at 20, 21, 22, all the way up to 30. And then those just never fill because it becomes painfully obvious once we're here and the rest of the bear market continues, like, oh, okay, it's over. And then those, what would that be, 10? If you had limit purchases all the way from 5K to 15K, you're going to sell 10% of your stack, which means you still have 90% of your Bitcoin in cold storage. But you sold 1% at 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. And then your 20 to 30 and your 30 to 40 limit cells just expire because they just never happen. And so then you can take your 10% and reinvest it. I mean, you can buy all the way down, or if you're a follower of the Plan B or the Plan G or whatever, and you think, okay, the cycles last 4 years and half is bull and half is bear, you can be like, all right, well, I'll just wait for somewhere in here and buy cheaper, and then I'll wait for the bull market. And again, this stays, once we get over 10 here now, this materially never collapses below 10 again. So that does seem to be a little bit of a pattern, regardless of whether you buy into stock to flow or power law, if you're team B or team G. This is just ballpark shit. And I'm not a physicist. I'm not an economist. I'm not a financial advisor. I'm not a tax advisor. None of that shit. But just eyeballing this, it just seems reasonable that we get pumps and we get 50 to 75% drawdowns. And so we never we never crashed below 10 again. And we're fully expecting to see 100. But if we get materially above 100, like if we get to 500 or 750, a 50% drawdown on 500K is 250. That would mean it would never crash below 100 again. If it gets to 750, even if 500 crashed 75% and 375 came off, it would still be at 125, right? Is that math right? Anyway, so even if it pumped to 500K and then crashed 75% on the next dip, anywhere between 125 and 500,000, if you're peeling off a little bit, you're still going to be able to get back in and cheaper 2 years later. If that happens. There's no guarantee that the cycles will continue. And so for me, my number would probably be we'd probably have to get, I'm a little bit bearish, I suppose, on how high we could go this time compared to some people are like $1 million. I can't get on board with $1 million, and there's no math behind this. This is total just bullshit gut feeling. So I don't want to make it seem like I've fucking done math and I'm like modeling out valuations and stuff. That has not happened. But 150 to 250 is kind of like my bear case, and I would be slap happy with 400,000 or 500,000. 750 I would be over the moon with 750. But my bull case is just my hunch and I don't really trade off of this information. I don't trade off of hunches, but it's still fun to think about, thought experiments. But 750 would be like my bull case. So if we get a 75% drawdown, so I'm a little bit bearish on our top, but I'm almost a little bit bullish on the next bear market as well. I don't know if we'll get a 75% drawdown like we've seen before. So I'm kind of feeling like we might get a smaller pump and a smaller crash. But again, not financial advice, and it's just me spitballing. But if we do get a 75% drawdown and it goes over 100,000 and never goes below 100,000 again, it would have to get to 400,000 in order to have a 75% drawdown and still stay over 100. If only a 50% drawdown happens, then it's only got to get to 200,000 before a 50% drawdown would never again go below 100. So I would love for us to be able to pump so far past 100 that it never goes below 100 again. And I'm reasonably, hopeful that could happen. So absolutely, if we get to 400,000 and 75% drawdowns is like worst case scenario, then I have no qualms whatsoever about peeling off or diversifying or buying something that I like, something that I got my eyes on. Maybe my Cybertruck reservation will pop right around that time. And if it hits anything over 400,000, to me is a no-brainer that you would be able to reasonably buy back cheaper. I guess if it does go to 750 or $1 million, yeah, even then, if you start peeling off profits at 400K and it does pump to $1 million, and you're like, oh my god, but it's still, if you're only peeling off 1%, and at that point, my limit sells might be like 1% at 400K, and then another 1% at 450, and another 1% at 500. Increments. You don't have to sell 1% of your shit every $100 increments. Big chunks. When the price is that high, I mean, candles are going to be $10,000 candles, like 1 minute candles. It's going to be insane. So if you start peeling off profits at 400K Bitcoin and it does go to $1 million, and then $1 million draws down to 75% to 250, you're still going to get a shot at taking some of your 400K profits and buying back in at 250. Now, if it goes to $1 million and only draws down 50%, and you started selling at 400, but if you're selling at 400 and you sell 1% all the way up to $1 million, then, if you're just laddering into, I might even be using that word wrong. I think it's all right. But if you're just kind of spacing out some cells over time and just, I'm not saying just drop your whole stack, but to me, it's not completely unheard of. And I know there's tax ramifications and you got to pay the capital gains on it. And then you'd have to buy the dip back so deep, so much cheaper that it makes up for the capital gains that you pay. But I mean, there's some places where taxes aren't a problem. I think, move your ass to Puerto Rico, check the tax laws down there, but I think they only charge a very small amount for capital gains. So Puerto Rico's on my short list of destinations if I want to drop a few stats on the open market. But yeah, that's the way that I kind of look about it. I imagine, okay, if we get a 50 to 75% drawdown, how high would Bitcoin need to be before selling at that point almost kind of, not a guarantee, but almost guarantees that you'd get to buy back in cheaper. And I think anywhere between 400 and 750, I mean, if you're selling there, the next drawdown's got to be back down to, I mean, I'm not saying close to 100, but if it goes to 750 and crashes 50%, it's still going down to 375. So that's how I think about it. And for sure, I mean, not Tesla, MicroStrategy is a levered Bitcoin play. So at the end of 2025, when the bull cycle has traditionally, it's kind of like, okay, if it's really going to hold to the 4-year cycles again, October-ish 2025 is going to be nearing the end of that bull cycle. If history repeats itself, no promises. But when everything starts to crash, if MicroStrategy crashes harder than Bitcoin, and there are some reasons why that may not happen again this time, because Bitcoin is not included in the S&P, but MicroStrategy will probably be included in the S&P by then. So there's upward pressure for MicroStrategy, even in a bear market that would not be there for Bitcoin. But so I don't really know how that would play out. It's possible that that MicroStrategy won't crash harder than Bitcoin next time. But for me, MicroStrategy is a financial play. I know some folks that I really respect consider MicroStrategy a generational play. They want to pass down MicroStrategy to their children and their grandchildren and just never sell it like Bitcoin. But even Saylor admits that his company probably won't be here in 500 years, but Bitcoin might. He won't be around. His company won't be around. So I fully intend to use MicroStrategy as a tool to buy more Bitcoin in the future. And I actually cracked open my cold storage and sold half my Bitcoin to buy MicroStrategy when it was to buy the MicroStrategy dip. So it remains to be seen whether that will work out for me in the end. And at the end of 2025, if MicroStrategy has appreciated more than Bitcoin, and whether I will be able to pay off my taxes and buy Bitcoin cheaper in 2027 or whatever the hell it is, but this is long-term stuff. This isn't like day trading. This isn't degenerate freaking trader mentality. This is a long-term thesis. So, I saw some people kind of explaining themselves when they were shorting Bitcoin or shorting MicroStrategy, and somebody was like, "You don't owe anybody an explanation." I'm like, yeah, true. We don't do whatever the hell you want. You don't owe anyone an explanation, but I mean, we're on X to engage with others. So engagement farming gets a bad rap, but engaging with others is just communication. So I like thinking about stuff. I mean, I'm an options trader, so maybe I just can't get that completely out of my system. And but that's kind of the way that I see it. And the other thing about taxes, like, I don't even believe that anyone owes taxes, but I damn sure pay them because I want to stay out of jail. So, but on the other hand, if you buy at 10,000 and you sold Bitcoin at 20 and you had to pay some capital gains on that, well, guess what? Then when it went to 50 and then it crashed to 17, if you bought back in at 17 or 25 or 40 or whatever, now your cost basis is at 25. It's not at 10 anymore. So then the next time you peel off some, you're paying capital gains on your new cost basis. So it's not like you're necessarily buying at $100 of Bitcoin and then you're taking this huge frickin', I mean, some of y'all might, I haven't been in the space that long, but some of y'all are like, oh, okay, and now I'm going to sell it at $1 million, and $999,900 is all capital gains. Like maybe if you're that, Bitcoin baller OG, that might be something that you got to worry about. But the other thing is too, like if you're sitting on millions of dollars of the Bitcoin, you don't have to peel it all off either. If you're, if you peel off 50 grand and that was your entire income for the year, you're still, like, I don't know. who knows what the capital gains laws and tax code will even look like at that point in the future. So that's all uncertain too. But there's just all of these fear mongering that people will put into you to just, for some reason, I guess, they just want to, fear monger. If you sell your Bitcoin poor, or have fun staying poor, or whatever, and don't do it because of the taxes, and don't do it because you can't time the top. And I mean, if something 10, 20x's and you peel off a tiny little percent and you ladder up as it 10x's again, it almost seems like it's impossible not to time the top to a certain extent. I mean, if I put in a limit sell every 50,000 from 550 up to 10 million, like, is there anybody that thinks we're getting to 10 million this cycle? No. So at some point, I'm gonna sell the top. If I sell 1% all the way, 100 limit sells between 500,000 and 10 million. I don't even know if that makes any sense. But whatever increments every 100,000 in price, then you're gonna catch the top or pretty close to it. So I don't know. A lot of people are like, "Oh, I'm not smart enough to time the market, so I just buy and hold." Okay, fine, but it just doesn't really even seem that hard to me. So I think that's all I got right now. I just don't understand. Well, you know what? I don't understand is not an argument, because maybe I don't understand because I'm a fucking idiot. But yeah, I guess I'm just surprised by the just the frothing at the mouth, rabid dog hodl mentality sometimes. I get it when it comes to Bitcoin completely, because there's use cases for Bitcoin that don't exist for MicroStrategy. So you can't put your MicroStrategy on a cold card, hop on a plane, flee the country in the middle of World War III or whatever the hell is going down, Civil War, some crazy shit like that, and then set up your new life somewhere else with your shares of MicroStrategy. That's not going to happen. The government could seize your the value of your accounts. But so there's a case to be made to peel off shares of MicroStrategy, Tesla, whatever, and accumulate cold storage. That use case and that reasoning is sound and will probably be sound forever. But I don't really see a truly, truly sound argument for never selling MicroStrategy. That argument is lost on me. The only asset that makes any sense to me is Bitcoin, because it for all of the reasons that Bitcoin is Bitcoin. You're basically a self-sovereign person custodying and securing your own wealth, and it's portable, and all of the attributes of money. Breedlove lists them out, quite frequently. So it's the most perfect money, and to me, MicroStrategy and the stock market, selling covered calls, all of that stuff are just tools to get more. I don't know if that sounds hypocritical of me saying, I just sold half my Bitcoin to get more MicroStrategy. However, it's calculated risk, and I don't even have a lot of Bitcoin. That's the crazy part. Not compared to what, if I compared stacks to somebody else, they'd probably be like, "Oh my God, you're a Bitcoiner and that's all you have." But if you have more than 0.02 or something, you've got more Bitcoin than the average person on the planet can even have. And with the way Saylor's stacking, that number is getting smaller and smaller all the time, and people are losing their Bitcoin. So the average person can only have a small number of Bitcoin, average. So I think if you have more than that, you're already more wealthy than half the population. So I definitely don't get making your life kind of miserable and living like a monk and just squeezing every little penny and just not enjoying life just to stack a few extra sats. So it doesn't mean just live like the grasshopper or whatever and have nothing to show for it, but live a little, enjoy yourself. When you're old and dead or whatever, you will only have the life that you lived. And I know passing Bitcoin down to their descendants is really important to a lot of people, and it's somewhat important to me. But at the same time, let them get their own Bitcoin. Let them prove to society that they're worth getting paid some amount of money. And if they can't do anything useful, if they can't serve their fellow man, maybe they don't deserve any Bitcoin. So just because they've got my DNA doesn't, I'm sure somebody in Hitler's lineage was a decent person, but that doesn't mean your descendants can't turn out useless. So no guarantees that your descendants will use your Bitcoin wisely. And I don't know if that's the most optimistic way to leave this video, but that's where I'm going to leave it. So be good, y'all.